perfect timing to have you with us. Will the BOJ tweak or not?
Yeah, no, it's great to be here. I'm in the right time zone today, that's for sure. I'm not sure. I thought when earlier in the week there were the leaks saying they would do nothing, it made me think maybe they would do something. Now the leaks are maybe they will do something, maybe they won't. I'm not sure, but I agreed with what Kathleen said before, which is one way or another, the speculation today, if they make some small change, I think that will build the expectation that we're on the way to the end of yield curve control, say over the second half of this year. So that's what I expect. I think today it could be quite confusing. The signal that they will allow yields to go above the 50 basis point mark without making a change. It's not obvious what the point of doing this is to me, but I would interpret that as a shift, over time towards the end of yield curve control.
You either have a red line or you don't. You either defend it or you don't. If it does allow it to go beyond the 0.5%, what is the purpose of that? It is like removing a ceiling. Is that the way you look at it?
Well, I guess so. I think the way I would interpret that is that the BOJ wants to move away from yield curve control, but they are concerned about doing this too quickly. We started this process last December, of course, when we had the widening of the bands. I think Governor Wade does not want to signal any great change to his predecessor, wants to signal continuity. I think over the course of this year, they will look to have greater flexibility, maybe end yield curve control. And let's see, maybe we get the signal towards that today. It's not 100% obvious to me what the point of yield curve control is at the moment, what problem the BOJ is looking to solve. I agree with the earlier comment as well that the policy rate over time is going to be very important. But yields have come down after the regional bank crisis in the US. It seems like a pretty good time if you're going to move away from yield curve control to do it now at the end of the hiking cycle. So I don't know. From my point of view, it's a policy that they have. It's hard to get out of these things. They're probably worried about the Australian example, among other things. But it's not obvious that there's a lot of point to this strategy for me at this point.
Andrew, reading your notes and saying if there's one way to really kick off an argument in your office, it is to really discuss what would happen if there is a change in the yield curve control and whether it's just a mere ripple for global markets or one which is actually perhaps something which really rattles investors. And which side of the coin are you on? Where do you sit?
Well, yeah, that's right. There's different views at Pimco. So I am in the camp that I don't think that the eventual end of yield curve control is that big a deal. Overnight we had US data, strong US data, of course, that pushed yields higher in the US. So I think this announcement today could be, if we do have a move from the BOJ, is worth something for global bonds. I'm not sure it's that significant. If you go back to December when they widened the band, it was not that significant. And we're in a world where we've repriced global yields, we've repriced central bank rates globally. From my perspective, the end of yield curve control, as and when it happened, would just be bringing Japan into line with the rest of the world. But that said, I have colleagues, it's often my colleagues who work on our hedge funds at Pimco, who will be very, very sensitive to shifts in terms of the BOJ. To the extent you believe that the BOJ has been and remains an important suppressor of global volatility. So I think it's a reasonable argument, but from my perspective, given the whole range of shocks we've seen, this is an incremental move.
Andrew, the thing is, Japan's economy seems to be coming back. There seems to be a bit of a sea change in confidence in the country. Shouldn't that be emboldening the Bank of Japan to do something here and get away from something which is now, in effect, pushing on a string?
So you're kind of you're preaching to the choir in the sense that I agree with you. It's not clear to me at this point, given the outlook for the Japanese economy, that you still need these emergency room policies in Japan at a time when we have normalized elsewhere in the world. If you look at behavior of Japanese swap markets, so less interest rate swap markets, so less affected by yield curve control than the JGBs. I don't see anything inappropriate in terms of what we've seen in terms of interest rate swap market pricing. So, it seems like a very good time to step away from this this policy. Now, I should mention, I'm positioned for the end of yield curve control. So we have positions in terms of interest rate strategies and currency, yen currency strategies. So this is our belief. This is what we think is going to happen. But I also do think it makes sense.